Okay, welcome to the High Altitude Investing live stream. Today is 7/13 of 2018, excuse me, and we're going to be going over Bitcoin and doing some technical analysis on it live. And then we're going to be going over altcoins as requested and a crypto flaw debunked, but I want you guys' suggestions, so go ahead and get ready to do that. Be thinking of one throughout the stream. But the main thing today is going to be technical analysis on Bitcoin and just some updates on the crypto markets and the prices. So we'll just be getting right into this. Let's go and check the live dashboard, make sure the health for the stream is fine, and make sure everybody is tuning in. Welcome, Dave. I appreciate you tuning in today. Already dropping altcoin requests. Nice. Cool. Yeah, we'll just keep these in mind, and when we're actually doing the altcoin TA, then I'll have you drop more requests then. But yeah, how's everybody's Friday going? It's a great day to be in the crypto space, and a lot of exciting things happening all the time with exchanges. A lot of exchanges being hacked and manipulated, and then we've got a bunch of news coming out all the time with big companies and Facebook and things like that. I don't really read the news or base too much of my price predictions on the news, but I like to keep updated in the space and see what's going on. So, yeah, Bitcoin is everybody's favorite coin. Let's see if we can get about 20 people in here before we start going over the exact price predictions. And again, as always, drop your questions. This is all live, so if you have anything you want me to talk about, if you have anything you've been thinking about that you just don't understand, go ahead and let me know and we'll get that sorted, or at least to the best of our abilities. The Coinbase additions. No, I actually do not take positions based on whether a coin is getting added to an exchange or not, etc. So if there's additional coins being added to Coinbase currently, I believe I saw on Twitter something about Zcash. I haven't looked into that all the way yet, but I actually don't take positions based on that. Now, it doesn't mean that we won't get a pump or anything like that, and Zcash is part of the long-term holds that I own, but I would not be taking positions purely based on that news article. Okay, cool. So we got about 20 people in. We'll just go ahead and start doing the TA now that we've got a few people to watch. Here we go. Do you think we're going to go sideways for a while? It's been really interesting trading last week. Nor shorts nor longs. Want to keep long-term position, so you see a lot of chop. Yeah, so I don't think that we'll see too much sideways movement. The volatility squeeze generally happens at the bottom of the market cycle. So as the prices drop more and more and more, the volatility gets less and less. And then there's a point where that volatility has to increase again. So just like how the market cycles are a cycle, the amount of volatility that there is in a market is also a cycle. So when you have a huge drop off of volatility for a long period of time, it's likely to see another increase of volatility soon. So with the crypto space, the low volatility for me is just an indication that we're getting closer to the end of the correction, because that just means that less and less sellers are there and less buyers are there. So it ends up being the bigger picture traders only left. There's ends up being not very many short-term trading opportunities in these types of conditions. But we're going to do some fractal comparisons. I recently updated the sick of correction chart on my trading view, and I want to talk about my comparison here. I've been talking about how the Bitcoin has been doing similar things to the NASDAQ for so long now, and finally, the more and more that I share it, the more people see what I'm seeing and actually get to apply this to their view of the market as well. And it's just like, it's such an obvious comparison for me that these two are similar. So we're going to be going over that today. And again, I always keep my trading view posts updated. So I posted this one in June of the 10th, 2018. And then my most recent update was today. So go ahead and follow me on TradingView. You'll get alerts if I post an update on my charts. Let's check the live dashboard, see how things are going. Hey, thanks for tuning in, Michael. It's good to see you. today. Met Michael in Consensus. He's really cool. Hey, what's up, Scott? Good to see you tuning in. More Coinbase news of coins getting added. Yeah, I appreciate you letting me know about that. I'll look more into it later. But as you know, news isn't my primary source of positions. I don't take positions based on it, and so I didn't really hear about that until the Zcash thing on Twitter today, and that's the only one I had heard of. But yeah, that's cool. We'll do some TA on some of those coins towards the end of the video after we get over the Bitcoin technical analysis. So, but okay, cool. So, yeah, thanks for tuning in, Game Jam. Good to see you, my little brother. He's got a bunch of YouTube videos himself if you want to go check him out. All right, cool. Let's get right into the technical analysis here. Here is Bitcoin between 2017 and 2018. As you can see, we had a nice price rally through the beginning of the year, starting at about $800 2017 and going all the way up to $20,000. This is why everybody's watching my channel right now, and I make good videos. And then also because everybody's talking about cryptocurrency now. When something sees this type of a gain, of course it's going to make a lot of people interested in this and increase the hype. So that was quite an exciting little rally. I rode a lot of this rally with a bunch of people on my VIP and then started selling off as we got closer to the top, and now we've corrected. But the point is that I'm pointing out areas in a fractal. So as you guys know, a fractal is just a mathematical pattern, or in simple terms, just a visual pattern that repeats itself in a similar way. And each of these little numbers that I have are just naming points in this fractal. So this first little part of the fractal is 1, and then we have 2, where you have a sell-off, and 3 is at the top, 4 being the bull trap, where buyers get trapped, and then the sellers take charge again, and then 5 being the bottom, or the bottom zone. So I'm not going to say that this is for sure 100% the bottom of Bitcoin, but I am giving you a generalized zone that it's highly probable to be the bottom at. So going back over to the NASDAQ, this happened between 1995 and 2003. As you can see, we have this 1, and that correlates nicely with the same one that we saw on Bitcoin. Oops, let me just line these charts up a little bit better here just so that y'all can see. Okay, that's close enough. Yeah, so we have this 1 where the chart begins, and then you have this nice pump, 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 and then you have a sell-off after that pump, and that's what I see this as right here, is this huge sell-off coming back down to the $5,000 levels. It correlates very nicely there. And then you pop up and you get very, very overvalued on the short term. And the same thing happens to the NASDAQ here. Very, very overvalued on the short term. Then in about 2000, the year 2000, we topped out on the NASDAQ. And we make this 3-point, which correlates very nicely with the 3-point on Bitcoin. And then we come back down and we make this 4-point, which correlates very nicely with the 4-point on Bitcoin. After this, we start dropping. We find some support at the $1,500 levels on the NASDAQ, coming back up, curling down again, coming back up, and curling down again, and then breaking out. And the NASDAQ has now seen new all-time highs, meaning that this market not only recovered, but it rallied to new highs. Okay, so let me just show you. There you go. So that's what happened after the NASDAQ did its recovery and did its correction. So this is what everybody likes to call the internet bubble. And calling it a bubble is like, it's whatever. I like to call it a market cycle because it's more just a cycle of human emotions that repeats itself. But you just have overvaluation and undervaluation. And as you can see, that undervaluation recovers and you have prices continue to rally on the upside. And so the NASDAQ is looking very, very nice here, breaking all-time highs again. And the internet bubble looks like pretty small in comparison to what's happening to the price action today. So let's go over to Bitcoin now and zoom out a little bit, go into maybe the 3-day time frame and pull down and kind of put it in a similar spot as what we're looking at with this. Okay, Bitcoin 3, 1, 2, 3, 4, 5. And by the way, shout out to Crypto Wolf, because he also did a great comparison to the NASDAQ, which is similar to this chart here. So if you want to go to Twitter, you can follow him, Crypto Wolf. He's somebody that follows my channel as well. Sometimes he tunes into these live streams, so maybe he will today. We'll see. But yeah, go follow him. I appreciate his work too. So yeah, let's just go like this. And so there's the internet bubble, and here's the cryptocurrency bubble is what people like to call it. And, you know, as you can see, the comparisons are very, very, very similar. So if we have the same thing happen as a recovery for Bitcoin as the recovery that happened in the NASDAQ, you know, we can just kind of draw how visually this might look. You might have a breakup like this. Prices rally, 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 hit some resistance, come back down, and start curling back up. Now, that was very quickly drawn. What I can do, I should be able to take this. Let me see if I can actually do this. I think I can. Bars pattern. Should be able to measure this whole thing that happened here. Copy it and, in theory, paste it here. Yes. Oops. Now you just have to shrink it because it's significantly bigger than the Bitcoin bubble, about 10 times longer in time. So I just have to take this, come over here, and shrink it down to about the same size. Okay, and then pull over here and make this a little bit wider and see if we can zoom in. So I'm basically just taking the NASDAQ, okay, and I'm throwing the fractal that it made directly on top of what happened in Bitcoin today. My computer is getting, I'll just have to close out of this since you've already seen that. It's getting a little bit laggy here just because this is a big image of the fractal, so I just need to kind of make this work here. But Bitcoin could do a very similar thing to the way that the NASDAQ recovered. It pumped the same way, it made a bull trap the same way, it's correcting the same way. It would not surprise me if it has a similar outcome in the future as the way that the internet bubble played out. So this is a great example of how you can compare fractals in multiple time frames and expect similar results, and take this kind of quote, quote, bubble that's happened in the past, paste it on top, and see what's a potential for cryptocurrency in the future and down the road. And fractals generally are pretty accurate. You can compare a lot of the different stocks in the internet bubble to crypto charts today and see strong, strong similarities to them. So I'm confident that this is a high probability outcome for cryptocurrency and Bitcoin specifically. Now, we don't know if it's going to double bottom the same way. Obviously, it's not going to do the exact same thing, but it's going to be close enough that you can take positions in the same areas, meaning that it's good to accumulate Bitcoin right now. And yeah, we could go a little bit lower. I don't think we will because of the shape of this wedge, but this is all a buy zone right now because we're expecting a break back up on the upside and then a potential retest of support, but then high continuation on the upside, bullish continuation. So, you know, comparison of these fractals are super important. Going around and seeing where you can get your data is really important too, to make sure that you're comparing things properly. Like, for example, we've corrected The internet bubble corrected 78%, and we've corrected about 73% in the crypto bubble so far. So we could go a little bit lower. It's possible, but either way, the range is going to be the same. And so that's why it's time to accumulate panic rather than be panicking or selling, because what are the smart doing? They're accumulating that panic. So you don't want to be the person doing the opposite of what the smart people are. But yeah, so the similarities are very, very strong. And I think that we are going to have a nice breakout here in Bitcoin. I don't know if we'll have another low here. It's really just all depends on whether the support can hold at 6,100. If that fails as support, it wouldn't surprise me if we do test the $5,000 level or $54 range here, 5,400 in BTC. But for now, as long as support is holding here, we're going to treat it as a potential bottom, because you can buy in this area and set your stop losses just as support here. And then if you do go in for another low, you get stopped out early and can buy the dip again. But for me personally, I just accumulate panic. So I buy a little bit here, I buy a little bit here, I buy a little bit here, a little here, a little here. I don't like to worry about getting the absolute bottom at the exact time, because the odds of finding that are pretty low. It's better just to play the cycle as is. All right, so let's just go over to the live dashboard, make sure everybody's caught up here. Yes, don't we all need a bull run in our lives, Jeff? I completely agree with you. And maybe at the end of this stream, I do a little bit of guitar ETC. We'll see. I've been doing one in every single episode, so I don't know. Maybe. If enough people ask, then we will. Let's see. Regards from Holland. It's 1:21 in the morning and driving over the motorway. Nice to listen. Thanks for tuning in, Peter. I appreciate that. Hope you're having a good night in Holland right now. I made some good profits on this bear by watching Dallin and doing the opposite of what he suggests. Good luck, gang. Well, that's an interesting comment, Crypto Quarter, because I've told people to accumulate the dip and that the bottom is, a fishing game. You just want to buy the dips and accumulate the bottom and not try to predict where the exact bottom is. So if you're making money shorting the market in a short-term bear trend, that's understandable. But I don't think that what you said was accurate by any means. All right, so yeah. Now let's start getting altcoin requests, because the majority of my Bitcoin TA is over here. We can just go into the 1 day a little bit here and zoom in, and you can see that we have some curling, some potential for a rounded bottom here. So if we just take our curve tool and do this, you can see that the lows are meeting in a nice circular manner. This was actually very prevalent when I told people to buy Digibyte in the last run. So I'll go show you what happened to Digibyte and why I saw a buy opportunity. The same thing is happening right here in BTC, this nice rounded bottoming formation. So let's just go over to Digibyte and look at what happened there. Okay, so in my VIP group, I told people to buy Digibyte right here in this bull flag because I saw a huge rounded bottom formation onto the 88% retracement, which was essentially the same setup that Stellar Lumens made around the same time. So I was just telling people to load into this one next. And then we saw this huge pump from about 1 penny all the way up to 13 cents in Digibyte, and then correction afterwards as expected and after a huge bull run. So this is a similar type of rounded bottom formation that could be occurring in Bitcoin currently, is this rounded shape. And it just basically means that as sellers get squeezed there becomes less and less of them. So they try, and then they get eaten up by buyers and it goes back on the upside. So that's why it makes that rounded formation, is just a squeezing of the amount of sellers involved in that area of the market. So see if we've got the blockchain. I do buy some stocks, Game Jam, but the majority of my holdings are obviously in cryptocurrency and the USD. All right, so yeah, let's get into Digibyte, EMC, and Tron as requested. So yeah, Digibyte currently, now let's do some updated price analysis on DGB. It's likely that we have a double bottom form on DGB currently. After this huge correction that it had at the beginning of the year, it's likely to see a wave up, even if it sees resistance and goes back down on a further downtrend. So the way that market cycles work are they are sine wave in nature. So they pump in a similar amount of time as they correct. So let's just take this sine wave tool over here on the left. It's going to be in the same area that you can find Elliott waves. And then let's just take and we'll draw where the pumping started in the first cycle and line it up with where the pumping started in the second cycle. So as you can see, we had some pumping right here in the beginning of 2017, and then through June and July, we corrected. In Digibyte, it went down 88% of its original pump, and then it made another pump all the way up to the 13-cent levels, corrected, and now we're in an area and in a zone where we can pump up again. And these sine waves a lot of times don't have to line up exactly perfect, but it's giving you an area in which you can expect that to begin again. So although you might not get an exact point, it's going to be a similar zone, right? So the timing of markets is cyclical in nature, and that's why you can apply this tool. So let's just go ahead and do a short-term wave count on Digibyte. Don't really want to do the long-term wave count because I've already done that for my VIPs. But I'll give you some short-term price action here. You have a 1 and a 2 and a 3 and a 4, 5 all the way up. And then you have yourself an A, B, C correction. And now we're likely to be making a 3 wave in Digibyte, as we've made a 1 and a 2 wave. So this would be 1, 2, and 3, 4, 5. So we're expecting Digibyte to head up towards previous resistance levels and previous highs that we saw in the bull run of 2018 and 17 specifically. So we are expecting this price action to head back towards those levels due to the Elliott wave count here and the double bottom forming. This bounced up really hard the other day when other things were correcting. Digibyte was just holding its value very nice and strong. So on the very, very short term, though, this could be a wave 1. So it wouldn't surprise me if we see a little bit of correcting on the 4-hour time frames, such as a 1, 2, 3, 4, that being a 5 wave, and then us forming the subwaves of an A, B, C correction back down to the 3-cent levels or somewhere in this zone. So short term, we could be seeing some more downside. Mid term, we're seeing more upside, and long term, we're seeing more upside for Digibyte specifically. All right, now let's go into the EMC squared. EMC squared, Einsteinium coin. Let's open up the Poloniex chart. Remove all potential drawing tools and go into the daily. So now this is doing a very, very similar thing to the rest of all of these cycles. Once you start to know how to apply these cycles to your trading and look at every single market cycle in a similar way, it really starts to pop out, and you can just see this plain as day, what they're doing and when they're doing it. This right here was a huge parabolic run on the upside, and as expected, you're going to have an intense correction afterwards. So what we've seen here with EMC squared is basically like a 90% correction. Let's just measure. Yeah, 97% correction for EMC squared, which is very, very, very undervalued currently. The pump and the rally was a 23,000% pump. And since the beginning of 2017, I believe it was like a 45,000% pump. So this coin just pumped so hard, which is why it's corrected so hard. Now, pulling up the Wall Street cheat sheet, this looks exactly the same as basically every single other altcoin market cycle out there. Only this one corrected harder because it went up so high. But we can just type in Wall Street cheat sheet. It's your classic market cycle chart. And you'll very, very easily see that we're in the depression phase of this market cycle. So let's just take this. And, we'll just label the top as a 1, the complacency as a 2, the anger as a 3, and the depression as a 4. So, you're going to look something like this. 1, 2. This was anger, 3, and this is depression, 4. And it's the same thing that happened here, this little bounce, and then you go in for a new low. Everybody thinks that the sky is falling, the world is over, when really it's just falling back onto a major support level in the previous cycles and shaking every single possible buyer out. So that's exactly what happened here. 1, 2, 3, 4. And again, 1, 2, 3, 4, down. So, yeah, we are expecting to see a reversal in this trend at some point soon with EMC squared. And then the next resistance levels are about 50 cents. Now let's go into Tron, TRX. All right, so Tron is a similar story as Digibyte, except it hasn't done its the first wave in its 3-wave yet. We have this huge pump, a fall back onto the major support area, and then you're going back into the support area currently. So this is already, for me, Tron already did depression right here at 23 cents. And then this is going to be your suckers rally, which is right here to the right. And then it comes back down and tests support. So that's a 1-wave. And the main reason that I see this as a 1-wave is because of the huge falling wedge that we're forming in the bigger time frame here. So that looks very bullish to me. I expect this to bounce off of that major support level and go up for a 3-wave. And then those resistance levels are going to be 18 cents and above for Tron. All right, so ZRX. Apparently this is maybe getting added to Coinbase. Don't quote me on that because, like I said, I don't trade news, and this is something that came out recently, so I haven't had time to look into it. ZRX, okay, remove all drawing tools. All right, so this has clearly done a 1-wave and then a 1-wave in the 3-wave and is setting up for a larger degree 3-wave. So that basically just means that we have made a 1 here and then we made a 2 right here. We're going to make a 3-wave up to a new high, and then we'll do a 4-wave back down to the support of the previous, and a 5-wave to an even higher high than that. Now, I want to note that when I draw my Elliott waves like this, I'm not saying that it's just going to go like this and zoom straight up to the price point that I'm drawing. It could, but I'm just projecting the areas and the way that the market will move down the road. So I'm not projecting time, I'm projecting resistance levels. And that's important to note, because if you project based on time, you're going to get screwed over, because time isn't a reflection of how much money somebody has lost. People don't care whether they're buying or selling. They don't care how long it's taking. They care how much their account went up or down. So if their account starts dropping really fast in US dollar value, they're going to panic sell, and the price is just going to fall more and more. But if the price is just staying the same in US dollar value, they're not going to do anything. But time has no effect on that. So when I draw these waves, again, I'm not telling you that this is just going to zoom right up like that. I'm just showing you that this is a 1-wave, and it needs to do a 3-wave at some point. So whether it does it in the beginning of 2019, whether it does it through 2018, is anybody's game. It's more likely it does it sooner than later because of how much everything's bottomed out. But it's just important not to try to predict the exact time in which something happens. It's not useful. You only care about price, right? Because that's where you set your stops. That's how you manage your risk. And that's what matters for your account balance going up or down. So, yeah. But anyways, so yeah, this has to do a larger degree, 3, 4, 5-wave up. And again, this is the first subwave in that larger degree wave. And, with time, it might look like this. And I'm not projecting time. I'm just showing you why it's not good to project time, because it could take up until July. Let me just, God damn it. There we go. It could take up until July of even 2019 before we make that 5-wave or that 3-wave out of this cycle. But that's a similar way that this might look and play out when it does do that. So, all right. Can you do fib retracement on where to enter Digibyte? Yeah, I could do like a little bit of a fib thing for Digibyte. Let's go back here. Since we know that it's making the subwaves right now in the smaller time frame of a 1-wave, we can go to the 3-hour, and we can assume that this is all a 1-wave. So this is 1 right here. And then we need to make a 2-wave. So 2. Now if we take our Fibonacci tool over here on the left and go from the low up to the high, and then take our ABC correction tool, A, B, C, then the highest probability for the 2-wave to land inside of this is going to be the .618 and the .65% fib retracement, like this. So that means that prices will likely do something like this and go down a little bit lower into these 27, or actually 0.27, 0.28 cents levels. And again, you use the .618 when you're getting ready for an impulsive 3-wave, because these 2 waves don't correct as hard in 3 waves. It could go all the way down to the 786 or even the 88%, but it's less likely to. So I would start buying here towards the 618 with Digibyte. And that's just kind of how you take a wave and you can analyze where to enter. Now, as you can see, because this was a 2-wave of a bigger cycle, 2 waves often retrace hard. So what happened here is you retraced basically back to almost 100% of its cycle. It went even below the 88% retracement and wicked. It came down and wicked down here, and then it went up afterwards. So, but yeah, this is all just a big 1 and 2-wave as well. The difference is this 1 and 2-wave is the big cycle, and this 1 and 2-wave is the first wave inside of the 3-wave of this big cycle, if that makes sense. Now, if that's a little bit overwhelming, it's Elliott waves you're not going to learn overnight, but as you start to practice with them, you'll get the hang of them. So don't feel bad if you're a little bit overwhelmed by counting them or spotting them and applying them to your TA. It does take a little bit of time, but they are the most useful method I have ever discovered. So that, and then just fractal analysis. But Elliott waves are a fractal, so technically when you're doing Elliott wave counting, you're doing fractal analysis. I don't really use pitchforks, no. Yeah, I just don't really trade with pitchforks. If I use a channel, I'll just use a channel tool. Let's see. Yeah, the same kind of method could be applied to all the coins that are getting added to Coinbase Scott if you're trying to enter in on them. All right, so now let's do some TA on, let's see, is Nebula one that we can do on TradingView? Nebula, yeah, we can. Okay, we'll do it then. So this is a similar thing to the rest of the market here. This one is obviously in a huge downtrend currently, but this downtrend is still doing the same kind of functions as the rest of the market, and a similar kind of thing as the bottom of the Wall Street cheat sheet. So I don't know if this downtrend is going to see continuation, but I will say that if we can have a breakout of resistance, it has a potential falling wedge that it's making currently. But yeah, this one is definitely on a little bit more of a defined downtrend. But if we can get up out of this wedge, it may produce an uptrend or a short-term uptrend. So again, just finding that support level, connecting the lows, finding that resistance level, connecting the resistance, and then you get a better idea of where the prices may project themselves over the next little while here. But yeah, this one's definitely on a more defined downtrend. So I'd wait for a breakout and descending resistance, and then buy the dip after the breakout if I was to play this somewhere right here. Because it may just produce a further downtrend in value. So, all right, let's go over here and check out Poly. I don't really do mobile exchange trading. I do all my trading on my computer, to be honest. So I'll check the price on TradingView sometimes if I'm out and about, or if I get an alert, but I don't really trade mobile. Or like I'll accumulate on Coinbase or Gemini with my mobile phone, but that's different than trading. That's just buying and buying and buying. All right, so Poly. Okay, there's got to be a better place than this because that's not very much data. All right, so we do not have very much data here for Polymath. So let's just go ahead and check on coinmarketcap.com for a chart. See if we can get a little bit of a better perspective here. And by the way, the document in the description of this video has Bitcoin charts and the comparison to the NASDAQ if you want to go look at that and see the comparison that I did for Bitcoin and my TA on Bitcoin if you missed it or you are curious what that is. So you can just check in the description for that. And if you stay towards the end of this video, I've got a little surprise too. So, okay. Polymath. In my last live stream, it was actually pretty cool. We were doing TA on Bitcoin, and saying that we were expecting a bounce, and it broke out during the stream and pumped like, I don't remember, like $400 or so. It's pretty cool. So yeah, this one is kind of a similar story here, just significant dumping and dumping and dumping. But you can count waves down and get somewhat of an idea of what's going on here. There just isn't a lot of data for this. So if you're interested in this coin, this is more of an accumulation coin, something that you just buy little bits of until it's on a clear trend upwards, because you just don't have that much data for the chart, and you just really, need a full market cycle to really get good TA going, or it helps at least when you're doing trend analysis. So this is a 1 and a 2 and a 3 and a 4 and a 5 wave down. So this could be, and those are just the subwaves of a correction. When you do an ABC correction, you have an ABC down, ABC up, 1, 2, 3, 4, 5 wave down. So that's how you count this downtrend. And then you could do a 1, 2, 3, 4, 5. But again, this does not have that much data, so there's no guarantee that this is just going to start impulsing here. And it is on a pretty big defined downtrend currently. But, if the rest of the market starts to pick back up, all of these coins are heavily correlated, so I'd suspect this one reverses as well for Polymath. But again, low data coin, so you can't get the best perspective. You could have played this falling wedge, though. Because it did make this falling wedge pattern right here before it pumped. So if you understood some pattern trading, you could have played that right there. So I use chart patterns, which is falling wedges, ascending triangles, rising wedges, cup and handle patterns, sometimes inverse head and shoulders or head and shoulders patterns, stuff like that. And then I also use oscillators, momentum oscillators. The only one that I like is the MACD, and sometimes I use the RSI, but I do not use moving averages personally. And then the majority of my TA is done with Fibonacci, rounded support numbers, and Elliott waves. And that's kind of what I've managed to build my trading style off of, is those things. So the main thing really is Elliott wave theory, and then just trend analysis. And then a fractal or two when I can find one. So nice. Yeah, it's always good to educate yourself and read up on books. So shout out to that Stacking Stoner. I really think that it's good to apply yourself. I have multiple books on technical analysis myself that I've just accumulated, and I talk about this on my Instagram. If you want to go follow me there, you can. It's just high altitude investing, just like over here. And I basically just show what books that I recommend to read for technical analysis so that you can apply those. Let's check out Cardano, Michael, and see if we're in a falling wedge pattern. And you are very welcome. I love spreading knowledge like this. So, okay, remove all drawing tools. Cardano was successfully able to make a new low here. Prices fell below the support of this area. Now, if we pop this one up here, and then we draw this pattern right here, you'll quickly see that it did make a falling wedge pattern as it did that. The new low was just a little bit below that previous low. And it broke out of this falling wedge pattern and formed another little bull flag right here. That's the other pattern that I trade a lot, is bull flags and bear flags. And then as you can see, we're expecting to see a 3-wave, a little 3-wave, and a 5-wave up out of this. That could take us to about 27 cents. Now, I do think that this is done correcting as well, considering that applying that market cycle chart again and that everything made a new low, we're likely to be in that depression phase of the Wall Street cheat sheet because we already had anger, and the depression is when you just make one more low below that anger. So I do expect this to see some reversal back up right here and the rest of the market to follow as well with those coins. So yeah, this isn't a falling wedge, just broke out of a bull flag, and would not surprise me if we see some nice rallying on the upside with Cardano. All right, so let's see, XVC. I don't know if that's a coin that is on XVC Vcash. Is that what you're trying to, XVC, please? Okay, I think this is the right coin. Oh, wow. Talk about some serious correction. This one is volatile. I mean, all crypto has high volatility, but this one is just wicky and very random, I will say. Yeah, this coin is crazy. Now let's just draw a falling wedge pattern because that's really easy to spot right off the bat. Falling wedge means that sellers are getting squoze or squeezed, squoze, I don't know, probably squoze. But yeah, as you can see, large body of sellers, a little bit less of them, and a little bit less of them, and now we've broken out of that. So this is likely to at least retest resistance of 44 cents here. But yeah, this is a little bit of a wanky chart. Let's checking volume. Volume shows us that we really don't have more than a $15 million day for Vcash. So it could produce a nice uptrend out of this, and it will probably produce some new highs along with the rest of the crypto market as we go crazy again. But yeah, right now this falling wedge will break out, but this volatility is just not good for trading because you might get wicked in or wicked out. So it's not one that I'd personally really play unless you're accumulating it for like fundamental reasons. So yeah, I can look over the Litecoin. If you're in a margin trade currently with Litecoin, and you have a potential of getting liquidated, I would definitely just make sure that you reduce some of that risk. You just downsize your margin position. I wouldn't just take your entire loss at once. You know, be smart about it. Average out if you need to. But you definitely don't want any possibility of liquidation. Like, it's just not fun to have an account get liquidated. So reduce some of your risk. If you have a bunch of a long position, you can short some of your long with a little bit of capital, and it will reduce your risk and reduce your liquidation price and bring it lower, because you don't want any possibility for that. Now with Litecoin, we're in a huge falling wedge pattern, and back to that sine wave. I already drew TA on this. I posted on my Twitter. Go follow me on there at high altitude INV. I basically just show this market cycle over here on the left, how it's a sine wave and how we had a nice bull run up with an expanding wedge, which produced a huge impulsive upside move. And then now we're producing a falling wedge, and we're expecting this cycle to see another reversal here and start breaking up again. You know, as far as like calling bottoms, I don't like to call bottoms, but this is getting very close to a point of reversal. So again, if you have any chance of liquidation, reduce some of that risk. But I really don't see us going much below like the $60 level with LTC here. We're pretty oversold here. This one is doing a very common kind of market cycle fractal that we saw a lot in the internet bubble in the 90s. So just because something retraces really hard does not mean that it has to pump really hard afterwards. In fact, sometimes if things retrace really hard, they produce large downtrends. But it's obviously a cycle. So there's going to be little moves on the upside and back on the downside if you're in a large downtrend in something. But just because something retraces super hard, you don't want to use that as the only factor. It's something you want to apply. Like, for example, you can go over to TradingView here, and then you can go on to CoinMarketCap, not TradingView. And you just click on all coins, view all, and then you click on the 7-day price action. And then it's going to show you the coins that have done a lot of bullish movement in the last 7 days. And then if you click on it one more time, it'll show you the charts that have done the most bearish movement in the last 7 days. So sometimes if you find one that has done a significant dip in 7 days and has significant volume and is on a larger degree uptrend, then you've got yourself a good opportunity for buying, right? So let's let this load here. It's taking a minute. I don't know why. And I'll talk about the log scale in just a second, Zach. Come on. Yeah, it's for some reason CoinMarketCap is having a really hard time loading these currencies. But you get the gist. You just click on the 7-day here and it will sort all of the currencies by the 7-day movers on the upside. And then if you click again, it'll sort them all by 7-day movers on the downside. Then if you find a coin with high volume and enough of a market cap that you know that you're not going to get in some type of an Nexus scam or some shit coin, then you can usually get yourself a pretty good entry just buying the dip on one of those and utilizing this. So how hard something corrects is kind of relative to volume and market cycles and then how big the uptrend is already in. But it doesn't necessarily guarantee anything as far as it being the biggest mover next. If that makes sense. All right. So yeah, let's just go over to the wax chart and then I'll talk about log scales. So we'll do TA on wax for you since you brought it up and had questions. So this one's on Bitfinex and this one has just been steady correcting since it got added to Bitfinex. If we just go on to the 6-hour time frame, we will get a little bit clearer picture of what's going on here. As you can see, this one has a nice increase in volume as the prices are dropping. It also just broke out of a falling wedge pattern that we have been producing since it got added to Bitfinex. So to see that breakout is a good sign. Now we just want to see if we go in for a 3-wave here. If we start trending up on the upside, it wouldn't surprise me if we went for the 40-cent levels again with wax. And that breakout is very nice and this volume increase is very nice as well. All right, so let's do the logarithmic chart. Now, I like to do the log chart on this. This is the BLX, the Brave New Liquid Index. And this basically just shows you the prices for Bitcoin as connected to all of the exchanges. So you get the entire history of Bitcoin since the beginning of its creation. And then if you just go into not the 1-month candlesticks, well, actually, yeah, I think it is the 1 month. And then you just click on logarithmic. You'll start to see the entire picture of the Bitcoin kind of story here and what's happened over the last since creation, since 1 penny per coin. So let's just go over here. Maybe 2 weeks will look just a little bit better here. And you can look at the chart. So this shows you big picture what the trend looks like. And I love that, to see the full trend and be able to do TA on that. So I do like the logarithmic chart. And I do use it and check it all the time. But but I definitely use the linear chart more just because, logarithmic is really big picture. And although I preach to trade big picture moves, it's also important to understand that you don't really get to see what's happening on the medium picture, which is, I like to trade 2 to 3 months cycles, but I'm not telling you that you want to trade an entire 10-year cycle like this. And you can if you want to, but I'm just saying, I like to stick to the linear chart on the smaller time frames because I get the most accuracy out of that, and it's the easiest for me to do my TA on that. But yeah, logged chart is great for big picture stuff, specifically like really big picture stuff, and not like, medium term or medium picture like what we do with the smaller swings. But yeah, it is really cool to see. You can count all these different things. Like you've got yourself a nice bull flag that formed right here. And then you had another bull flag form right here that it broke out of. And now we have a falling wedge forming. So you can do a pretty good analysis on the logarithmic chart in the 2-week and the weekly and the monthly time frames. And it is best to do it on this exchange because it gives you that true growth curve for Bitcoin and the way that it actually moves. So all right, so let's do BNB. So yeah, I've tweeted about this one a few times, and I've talked about how I think Binance Coin is a great one to be holding during all of this movement because BNB is doing better than a lot of other coins in the markets, holding its value way easier than some of the other coins. So let's just look here and see what's going on with BNB. So yeah, this is a big support level that we're hitting currently. So support trend lines are often a zone and kind of a range. So you can take this and you can clone it. And you can see where it's held support even closer to this in the past, like that. So there's kind of that zone that it reaches and finds support on. And then you can clone this. And clone it again. And this will give you your resistance kind of zone here as well. So it's been moving in a very nice upward channel here. I don't suspect this channel to go anywhere anytime soon. This is actually a great opportunity to pick a little bit up. Not a ton. Don't go all in on anything, you people. Like, seriously. But accumulate stuff. This is right on its trend line. And we also did a bit of a falling wedge pattern here. So it wouldn't surprise me if we break back up and this trend continues. BNB, since the beginning of the year has been on a steady uptrend. It did correct right here, but as far as it holding value in comparison to the rest of the market, it's done way better. So and again, that's just because I think that these exchange tokens do really well because they don't really have to worry about the prices going up and down because people are still going to be buying this token so that they can have less fees. If they're shorting the markets or longing the markets, the exchange token doesn't really care so much. It's just going to continue to increase in value as long as traders stick around with crypto and Bitcoin. And I don't think traders are going anywhere. So now let's check into ZEC because of the Coinbase news. Move all drawing tools. So yeah, Zcash is in kind of a similar story as the rest of the market. You're in the depression phase of its market cycle. Had a big uptrend during the bull run. You can tell that you're in depression because you failed the support line, the trend line, and then it became resistance. That is indicative of a depression phase in the market cycle. And then you also have that same falling wedge breakout pattern. If you're interested in where to get in on this coin, you might want to try to buy the retrace of this wave that it just made. And I like to use the .618 for that. So you could buy in this zone right here at about 165. That's a spot that you can see the rejection happen, and it should land back into a support area before going back on the upside. But yeah, that did that same falling wedge pattern. It's in the depression phase of its market cycle. And obviously it sounds like there's that news catalyst, although I do not trade news. Say that over and over and over and over. But yeah, it's a beautiful day in the crypto space. It really is. Things are looking, as usual since the downtrend and everything. People have been having a really hard time handling that. I know a lot of people, it's been their first correction, so it's really hard on you if it is. So it's okay to feel that way. It really is. It's just part of these cycles. Don't get too attached to the way that you're feeling. If you're feeling down on yourself and you're feeling depressed, click on this chart again and look and see that depression is literally the lowest point of the cycle. So getting stuck on that area of this cycle, won't do you any good. Don't get stuck in the depression. Just allow the depression to finish itself out. And if you're having a hard time with your portfolio, don't keep trying to trade. Don't keep trying to trade. Make sure that you just have the amount of US dollar that you need. So make sure that you get yourself a little bit of dollar tether on the sidelines, 30%, and then let your account play out. Don't look at the amount too much. If you're new to this, it's really not good to be trying to overtrade in this period of time or make tons of investing decisions. Let the market complete its cycle, and then when it's on a bull trend again, you can start to adjust amounts in your portfolio, and do more trading then. But you don't want to be trying to make back on losses right now. If you have the mindset of, I'm trying to make back on losses, that's really not what you want to be doing in this type of a correction phase of the market. You want to let it finish, and then when we're on that bull trend again, that's when you make back on the losses, because over trading in this period of time can screw you. But yeah, so I think that's pretty much everything for today's live stream. I really appreciate everybody that tuned in to this. I think that there's going to be a brighter day in the crypto space, and I've been preaching that the whole time. But you just go ahead and click on this dark document and look at the comparison between Bitcoin and the way that the internet bubble happened, and you'll see that although we don't know for sure if the bottom is in right here, right now, is likely to be in soon. We're doing the same pattern. We're really, really oversold, and this market has to see some more upside movement from here. Now, anything's possible, and this obviously isn't investment advice. Disclaimer on that. I've got disclaimers in the description as well. But this is where I'm putting my money. This is how I'm playing this market, and this is why I'm accumulating. So you can take it and you can use it for yourself as well. Like I said, that there would be a surprise at the end of this video. So if you haven't had a chance to get in the VIP, there's a discount in the description here. This code right here on the website will get you 20% off. We brought back the Discord, so we've got a bunch of members in there all the time talking and trading or posting signal updates. And if you're part of the VIP, you get email signal updates as well. And the code is active20. This will get you 20% off of my 49 video course, as well as the signals, which come weekly and then even more than that sometimes. And then we've got the Discord chat area and the channels so that you can talk with other traders and learn this stuff and ask me questions in the questions box if there's things that you don't understand or that you're still learning. And the 1 year is a great spot to get going with this if you're new to all of this. And then the lifetime, if you want to get a little bit more in depth, this comes with 6 extra videos, a how to quit your day job series. And then the mastermind also comes with lifetime. So it says 12 weeks here, but that is 12 weeks of live webinars with me, basically like a one-on-one setting where you can ask questions. I know Scott in the live stream here is part of the mastermind, so you can go ahead and say, how you feel about that if you like to, Scott. He's been in it for a while. So it's definitely a great way to get more hands-on, ask more direct questions with me, and learn how to trade Elliott waves in a better manner, in a more detailed manner. And it's also nice to have that live setting every single Saturday so that you can get questions from me. And again, after those 12 weeks are up, you get to keep your lifetime subscription, your lifetime subscription to the signals and the video courses. So, but yeah, if this is something you're interested in, go ahead and click on that shop. You can add it to the cart and apply the coupon code. It will take 20% off your order. I accept PayPal, debit card, credit card, pretty much every single cryptocurrency you can think of. So if it's something that you have been waiting on, education is valuable and it will go a long way if you invest in it. So, but yeah, I appreciate everybody tuning in to my stream today. I really, really hope that you are keeping a positive mindset. I know that it's been rough and I know that it's been hard, but just understand the cycle, allow it to do its thing, and don't get stuck on the fact that we make a little bit of a new low in the market and that your account is dropping. Don't check it if you need to have some time away from it. Make sure that you have your risk management in place to some 30%. And when things shift back around, you'll be set up so good to make money off the next bull run. So yeah, thank you all for tuning in today. And as always, stay profitable out there.